Hi everyone, welcome to the show this week. Today we have a very special guest, Mark Yaxley from SWP Strategic Wealth Preservation, live from his underground vault. Hi Mark, how are you doing? And can you touch a little bit of gold, just to show that you really are surrounded by gold in an underground vault?
Hey, Luke, thanks for having me on your show. And yes, this is in fact real gold. As you can see, it's pretty heavy. I almost dropped it on my finger there, but welcome to the SWP vault in the Cayman Islands.
Genuinely, I'm very impressed at how easily you lifted that gold bar, because I know how heavy gold is. Mark, could you give us a brief introduction as to who you are and your history at SWP and what SWP does?
Sure. My name is Mark Yaxley, CEO of SWP. I've been working in the precious metals space now for 18 years. Started as a very young man, working for a company called Kitco Metals, and transitioned here to SWP in 2014. We do two things, Luke. We sell precious metals to our clients. We also buy them back, so we make a two-way liquid market, as well as providing secure storage for the precious metals once they've acquired them. So a pretty simple business model, really, but we call it a fully integrated precious metals dealership and secure storage facility.
So the term precious metals, it might mean a lot to some, but to others, maybe not as much as it should. Do you think you could give us a bit of an explanation as to what precious metals investing really entails?
Yeah, a few basics. Always a good place to start. There are 5 precious metals. Obviously, a lot of people know about gold and silver. The other 3 are platinum, palladium, and rhodium. Those are the 5 precious metals from the periodic table. You might recall it from your high school science class. So when people are investing in these metals, generally there's 3 ways that they'll go about it. More traditionally, less so today, people would buy certificates from the bank. So they'd go down to their bank and say, I want to invest in gold. And the banker would hand them a paper certificate and promise them that the gold was in the vault. That's a little bit less common these days, with the invent of the internet and transacting online. That's kind of gone to the wayside. More commonly, people tend to invest in mining stocks. So they'll speculate on the productivity or the output of a physical mine that is mining precious metals. You also have the ETF market, which is very common these days. That's pretty much replaced the bank certificates, which I mentioned earlier. So people can trade shares of gold and silver that are backed by the physical commodity, like you see behind me. And lastly, which is the part of the business that we specialize in, is the physical bullion bars and coins. So people are buying physical gold, physical silver in the form of not only those large bars behind me, but some smaller bars as well.
Well, let's jump into that just a little bit more. So what do you think the pros and cons of a precious metals investment with regards in each of those different methods you've just described? I will actually start off by saying that the first investment I ever made was, well over a decade ago and a half ago actually, was a gold mining stock under the advice of a broker, a friend of mine. Anyway, I pretty much lost all of my investment. So I suppose, what are the benefits of the other options?
And no, that's a really good point. And if you are going to be trading in mining stocks, you have to be very well educated on the space, because what that really comes down to, especially if you're investing in juniors, what they call junior miners, which are exploratory companies. These are not necessarily mines that are producing a ton of material yet. You're basically placing a bet that they will find gold or silver underground and then start extracting enough volume to create profit for the company. So to your point, many people have lost money in the mining space, and I'm not saying that there isn't benefit, but you really need to educate yourself and understand which companies are best positioned to have a return on investment for you as an investor.
I would actually like to jump in, if you don't mind, because I used to work in the IPO space in very small companies, mostly mining companies, more specifically actually, and the pitch they gave was always the same. And it's always like, we haven't found gold for years, but we've got new permissions, and this time we're very sure we're going to find gold where we're drilling. So I'm very bearish when it comes to individual mining stocks.
And if I can share a true story, and I'm not going to name names, but about a decade ago, I was having dinner with a guy who pitched on behalf of a lot of mining companies, and after a couple glasses of sake, he said to me, 9 out of 10 of these companies are dogs. And that was the moment when I realized that investing in mining stocks just wasn't for me. So personally, and what we do with our clients is we sell the physical bullion, which is a much more, I guess you could say, conservative approach to investing in gold and silver. It's really just tracking the spot price of gold and silver. So it really becomes a long-term investment. You're buying property, essentially. This is considered your property under the law, just as your home would, or a very expensive watch on your wrist would be considered personal property. And so it eliminates a lot of the uncertainty maybe that investing through mining companies brings to the table. Your other option is the ETFs, which I mentioned are very popular. A lot of people like them because of the ease of access, and they feel that it's comparable to buying in any share basically on the market. So it's quite easy. You can log into your online broker. You can buy a share that is tracking the price of gold. What a lot of people don't understand is there are a lot of underlying costs associated to ETFs that, unless they read the fine print, which most people don't, they think they're getting a really good deal. But in fact, the fees and the performance fees attached to ETFs can actually be fairly high. So, again, I think for a short-term investment, if your horizon was like 3 to 6 months, you felt that the gold market was going to take off, I'd say an ETF might be the right bet. But if your time horizon is more like 5, 10, 20 years, talking like estate planning, retirement planning, then physical gold might be a better bet for you overall.
Well, one last thing before we move on to the next question, which I suppose is quite tangential here, but you did say estate planning, and it was a while ago, but you once told me about a specific quirk with UK gold coins and their tax status. Could you expand on that just a little bit for our viewers?
It is actually, I think I told you this, Luke, when we were at the conference together, and it caught your attention because you asked a follow-up question about it. So thanks for bringing it up. So the UK government, first of all, enables citizens to hold gold and silver in their SIPs. But the benefit that I was alluding to was that Britannias, which are the bullion coins produced by the Royal Mint of England, are not subject to capital gains. So they're excluded from capital gains taxation. So if you were to buy a gold Britannia, it appreciated in value over the years, which you would expect that it would, and then sold it, you would have no capital gains payable on that investment, which, I mean, you're the expert, but there are few and far investments these days where you would have a capital gain excluded outcome. So I think it's a great opportunity for people, and they should definitely consider it.
No, I just wanted to bring it back up again because when I heard about it, I couldn't believe that the UK government would have an investable asset such as gold be tax-free. And I know it's not all gold, and it's just a specific coin, as you mentioned. I just thought it was a really interesting tidbit. But rather than focus on specific gold products, let's actually just take the question back to precious metals as a whole. So what draws people in to investing in precious metals markets, and what are the benefits of that investment? And if you don't mind me asking, what are some of the negatives to those investments as well?
Right. I think there are two main drivers why people end up in precious metals. And I'm going to focus on physical metal because investing in mining stocks is really more of a speculative investment, and it's not an area of my expertise per se, so I don't really want to comment on it any more than I already have. But I think when it comes to physical gold, there are really two main drivers. Number one, for people that have already created a lot of wealth, they've had a successful career, they've had a successful investing career, their focus will turn from trying to create more wealth to trying to protect wealth. And gold is an excellent diversifier. It's an excellent hedge because it doesn't act like most other asset classes. And therefore, for people that have already accumulated a lot of wealth, what they're really thinking about at this point is wealth insurance. They're like, how do I protect what I have? How do I make sure that I can pass on this amount of money or more to my kids? And I think that is one of the reasons that gold ends up in their portfolio. The other group of people who may not have accumulated as much wealth and may not be using the asset as a diversifier are basically, and this might not be the right way to say it, but I'm going to say it and have a very honest conversation with you. I think a lot of it is fear driven. These are people that do not trust the banking system. They do not trust their local government, whether they live in the United States, whether they live in the UK, whether they live in a third world country. They've lost trust in the system, and they're trying to protect themselves from possibilities like, their bank accounts being frozen, which sounds kind of crazy, but it actually happened in Canada like 2 years ago, the country where I live. So that second group of people, maybe it's a little bit more fear driven, and they end up investing in physical gold and silver as a hedge against those fears as well.
Well, it sounds to me like the primary driving factor is trying to reduce risk or risk aversion when it comes to investing.
Yeah, you could kind of boil down those two groups exactly to that. The underlying fears or risks vary depending on where the person is living, what part of their life cycle they're in, and their investment cycle that they're in. But yes, in fact, they're not, and they should not, and this kind of ties into the negatives of investing in metal, which we'll get to, but they shouldn't be buying gold. And this might sound a little crazy, but don't buy gold to make money. You buy gold to protect money that you already have. That would be my advice. And that doesn't apply to everybody. So if you're a very young person trying to build wealth, and I'm sure you help a lot of people in this situation, buying gold wouldn't be my best advice to those people. I definitely point them towards equities and GICs and possibly even crypto, but gold wouldn't be the most ideal way in the world to do that.
Well, this is how I know that you're an honest person, because you're the CEO of a company which specializes in precious metals investment, and you just told some people that maybe they should look to other assets if they fit that circumstance.
By no means, Luke, would I ever sit here and tell people that they should put 100% of their money in gold. That would be the worst possible advice. And there are some gold dealers out there that will push that narrative. Again, if you're being conservative, 5 to 10% of your portfolio allocation could go to metal. And we can talk a little bit about how to do that later on. But yeah, no, you don't want people to be overly long in precious metals.
What would you class as the main benefits to an investment into precious metals? Of course, wealth preservation is definitely one, and what would you class as the negatives? I think we've almost covered all of them already, but if we can just really boil them down.
Yeah, I'll give you two real life examples of when you would have been thankful to own gold and silver in your portfolio. The best real life example that I experienced personally in my career thus far was the 2008 financial crisis. During that period of time, and I'll speak to the American market because that's the market that we serve mostly, or we served mostly at that time when I was working at Kitco. So the average investor, it was estimated, lost about 30 to 40% of their net worth, depending. It was either real estate, their equities during the financial crisis in the United States and in Canada. During that same period of time, gold appreciated in value by 140%, and silver was up 400%, believe it or not, from 2008 through 2011. So if you're looking for benefit in terms of how it helped your portfolio, which is, I guess, ultimately what we're addressing here, then the financial crisis of 2008, which was a horrendous, crisis that affected almost everyone globally, would have been rendered much less horrendous for you if you had a 5 or 10% or even higher, talking 18 to 20% allocation of gold or silver in your portfolio. You would have come out even or even slightly up. So that's a real life example. The other one that I like to point out to people, which was a little bit more short-lived, was COVID. And I use COVID because it was such a black swan event. Nobody saw it coming. Nobody knew what the effects would be. Nobody expected that governments worldwide would effectively shut down their economies and destroy the supply chains that had been working so well for 100 years. Gold surged about 35%, I believe, after an initial decline as the markets reacted to the news, but then it surged by about 35% in about a month. And a lot of people rushed to the gold market to protect themselves from what they assessed as risk and fear. So another real life example of where you see the actual financial benefit of owning gold and silver in your portfolio would be crisis situations. So if you look at a trend, if you took like a 10-year trend line for gold and silver, about 80% of the time it trades sideways or slightly down. And a lot of people are like, well, that's a horrible investment. But the other 20% of the time it trades in spikes upward, which are quite strong. Again, gold 140% in a 3-year period during one crisis, 35% in a 1-month period. That's where it makes its gains. And that's when you want to have that wealth insurance aspect in your portfolio.
I think before you even said the word wealth insurance popped into my head. That to me sounds like what you are saying, precious metals investing really is in a portfolio, a way to insure yourself against these terrifyingly negative events in the market. Now, you've given some fantastic historical examples of when it's great to have gold. And funnily enough, right now in early December, it does seem to be quite a positive time to have gold, specifically as gold prices are very high when compared to their historical prices. Could you give us a bit more information or history over the last year of how precious metals have performed up until this point?
Right. So a little bit of background context of before we get to the 1 year ago looking forward. We were coming out of COVID. COVID was a very good time for precious metals in general. There was quite a bit of price appreciation for obvious reasons, some of the reasons we just spoke about. But as we came out of COVID, we started to see a pullback in the precious metal prices. So we found ourselves in kind of recent lows. Gold was trading about $1,800, $1,750, $1,800 US an ounce. Silver was below $20, which was quite a good time to be buying. So few people buy the dips in precious metals. One of the biggest mistakes, people buy the news, and that's when gold and silver are quite high. But what happened since then is the main driver for the price of gold over the last year has really been central bank buying. And to most investors, they might not really understand what that is or who is buying, this gold. So central banks, essentially, these are sovereign institutions, or, depending on the place and how they organize themselves, like China, for example, country is acquiring a lot of gold. You have Russia that's been acquiring a lot of gold. You have a lot of Middle Eastern countries that have been acquiring a lot of gold over the last couple of years. And why they're doing this, generally speaking, is because they sense there's a lot of geopolitical macro risk. And the argument, well, you don't have to look too far. You had a major conflict break out in the Ukraine, and now you have a major conflict that's happening in Gaza. So you have two wars occurring simultaneously in Europe and in the Middle East, which creates a lot of risk at a very high level. And that's why central banks are very attracted to gold at this point in time. The ETF segment of the market, which is kind of most mainstream investors, doesn't particularly have a good appetite for gold at the moment. They did up until recently, but they've sold off positions. They're very finicky, very unloyal to gold. So they come in and out of the market essentially. And then you have the physical buyers, people that we work with, our clients that are very long-term buyers. So they help establish a floor and their appetite is consistent. But really, in the last year, to summarize, the floor or the gold price, as you've seen it rising, is due primarily to central bank buying, supported by short-term bursts of the ETFs and physical buyers coming into the market.
Well, you mentioned China, and I've always been led to believe that this is true, but I've actually never asked this of an expert. But I've been led to believe that part of the interesting thing about China acquiring a load of gold is that in China, you're not allowed to export gold outside of the country. So once it goes through those borders, it doesn't leave. Now, is that the case? And is that almost a really good thing for the long-term prospects of buying gold?
That is, as far as I'm aware, that is correct. I know that you have two hoarders of gold in China. Essentially, you have the central bank and you have the individuals, the private individuals. Now, you've lived there, so you have a better sense of how much gold private individuals or how much value they place on gold. But I've heard, and statistically speaking, it is a relatively strong gold market, and obviously a very large market. So from a consumer standpoint, there are a lot of people that are buying gold, and I know that the government encourages their citizens to buy gold. And so, long term, yeah. I mean, if you've got a country that large and economically that powerful that is hoarding gold, it certainly doesn't hurt the gold price. They have a very active exchange in Shanghai as well. When you couple that with places like Dubai, Zurich, obviously London, New York, I mean, these are major markets where gold is still, believe it or not, to the man on the street, they might not realize it is still a very actively traded commodity. And a relatively large market.
So are there any points of interest that we haven't discussed yet, which influence gold? I think we're focusing on gold a lot. So precious metals prices. So what should investors look out for? I know obviously we've mentioned black swan events, times of disaster, and central bank purchases, but are there any other key factors that goes into influencing precious metal prices?
Yeah, key factors that influence the price on a daily basis is number one, strength of the US dollar. It's priced internationally, it's priced in USD. So obviously a stronger US dollar means you're going to have a lower gold price. A lot of investors right now are betting that the dollar will weaken slightly as interest rates come down. Their economy is still running fairly hot. So the bet right now is in 2024 that we should see higher gold prices. I'm still uncertain if that's how things will play out, because I do believe the equity markets are going to improve as well, which is competition for gold essentially. Not to mention Bitcoin being competition for gold as well. So the USD is something that you want to keep your eye on a daily basis if you're looking to enter the market or potentially exit the market for gold. Obviously, more long-term thinking is required when you are considering a sizable investment in gold. So if your belief system, or if you believe that the world is going to remain a place where war is fairly common, where you have your black swan events that occur from time to time, that there will be a certain level of instability, you can pretty much rest assured that the gold price will continue to react to that kind of news and uncertainty and act as wealth insurance for wealthy people, for central banks, and for the common person who, can afford a few ounces. There's probably a pretty good chance that if you and I spoke again in 5 years, gold would be somewhere between 2,500 to 3,000 US dollars per ounce. It was 600 when I started 18 years ago, and it's recently touched 2,100 US. So definitely some upside there, but again, one thing I would caution people is it's a long-term investment. Do not get into gold trading if you think you're going to make easy money. There are other markets that are much better for that. The other thing I would say to gold investors or people considering getting into gold, and when I say gold, I mean silver, platinum, palladium, any of the precious metals really, is you also have to have an exit strategy. I see a lot of gold investors that have been in the market for a really long time, and they've missed a lot of opportunities and record highs to sell at a profit and reinvest that money in another market that is probably undervalued. That's probably the most common mistake that I see from gold and silver investors. They become very, very loyal to metals, and they forget that there's time to take money off the table as well.
I suppose that's a very interesting point. Because if you in 2006 had bought a bunch of gold, 2007, 2008, great financial crisis happens, but then you never sold gold, all of that upside that you would have got had you sold is essentially, well, I wouldn't say necessarily lost, but as you wouldn't have lost so much money that wouldn't have been put into stock markets or property at the time, but not selling costs you will miss profits.
It's a great example. And on the flip side of that is you could have reinvested your profits from your gold and silver into the equities markets, which were trading at lows, and then had, a great run afterwards. So yeah, just some common, food for thought for people that are thinking about getting in gold and silver. It's not a magic bullet, and it's only a part of your portfolio and should be treated as such.
Now, you said central banks are pushing up the price of gold this year, as well as the market betting on the devaluation of the dollar as they look towards the Federal Reserve to lower interest rates next year. Are these the only factors that people should be looking out for, or are there some others? And do you have any thoughts on how next year, or 2024, or the future in general actually, will play out for precious metals?
I mean, there are obviously a number of factors that you have to take into account when making the investment in it. If again, it depends on your time horizon, right? So if you're worried about kind of intraday gold and silver prices, you're going to be, watching the news like a hawk. For example, the US presidential situation next year, the elections with Trump will have an effect on, Americans' appetite for gold and silver. And that's a large market. It's 340 million people. And depending on the outcome of that election, they'll either sell more gold eagles in America or less, depending on who's elected. So you have the Indian wedding season. How popular does gold remain for Indian families moving forward? So there's it is a very complex market because it's so international. I mean, gold is traded in every country of the world. And so it can be challenging for the average person to take all that information into account and make wise decisions. Therefore, takeaway is make it a long-term investment. Look at a long-term gold or silver chart, gold in particular being the pillar of any precious metals portfolio. And I think if you have a longer term horizon and you understand that 80% of the time your investment's going to trade sideways, but that other 20% of the time you're very happy with the result that you've achieved because of some of the bad news and realities of our world, I think you'll do just fine.
I suppose a second takeaway could be that given the complexity of the nature of the gold market, retail investors, or investors such as myself who don't fully understand it, should defer to individuals like yourself who have that knowledge and that expertise, so that with that in mind, actually, if anyone watching at home wants to get started with an investment into precious metals, where should they begin?
Well, my advice, Luke, is first of all, they should probably call you. Call a financial advisor, call a professional, someone that can help you position gold as a part of a balanced portfolio, because that's a key takeaway from today's conversation, is just understanding the role that it plays within a portfolio. And once you've done that and you can come to a determination about how much money you want to allocate towards gold, then you or that client, the Black Tower representative, can refer them over to SWP. And we have a good working relationship with you guys. We have for a number of years, and we'd be happy to help them out.
Wonderful. Well, if anyone does want to get in touch with a Black Tower advisor, there should be a link in the description of this video. But for now, Mark, we have come to our end. So Mark, thank you ever so much for joining me today and answering my questions. I had a wonderful time, and I hope you have too. Is there anything you want to say before you go?
No, thank you for the opportunity, Luke. It's always a pleasure seeing you, and I look forward to seeing you at the next conference.
Wonderful. Well, maybe we'll have another video before then. Well, until next time, guys, thank you for joining me. I've been Luke Staten, and have a wonderful week ahead of you.